Silver vaults are draining fast. If you've been watching the precious metal space, this might be the moment everything shifts. Otavio Costa writes, silver, when measured against CPI, has just broken through a resistance level that held for 46 years. More importantly, even after this breakout, silver still sits nearly 80% below its 1980 peak on this metric. Of course, that assumes CPI is an accurate measure of inflation, which it likely isn't. If we account for real fiat debasement occurring today, driven by one of the most extreme expansions of global money supply in history, silver remains one of the most undervalued monetary assets, in my view. This is a powerful long-term perspective. What he's highlighting is that when you adjust silver using the Consumer Price Index, the metal hasn't even come close to its inflation-adjusted highs. And his point about CPI being imperfect is something analysts often debate, because CPI doesn't always capture the full impact of currency debasement or money supply growth. His takeaway is essentially about valuation through a monetary lens rather than a simple price chart. The Great Martini's post. Silver cup and handle update. $52.60 activates the breakout above the handle. So he's zooming into technicals. The cup and handle pattern is a classic bullish continuation signal. And what he's pointing out is the trigger level that chart watchers are focused on, $52.60. It's a clean technical threshold, and many chart analysts have been watching that zone closely. Rashad Hajiev. Once silver takes out its double top around $54.50, it is game over for short sellers. I doubt anything could stop the coming avalanche in silver price. This comment reflects the sentiment among traders who watch long-term resistance levels. His reference to the double top around $54.50 is the key historical line many analysts are tracking. He's expressing a strong opinion about momentum, not a prediction, but his personal view about what could happen if that level breaks. Bald guy money on market sentiment. Diamond hands have nothing on silver hands. We take a lickin' and keep on tickin'. This one adds some humor. It captures the mindset of long-term silver holders who've weathered volatility for years. It's more of a cultural comment than a technical one, but it reflects how emotionally invested parts of the community are. Kitco News reports, gold, silver up as FOMC minutes and U.S. jobs data on deck. Gold and silver prices are higher near midday Wednesday, but down from their daily highs. Modest safe haven demand is featured at midweek amid a jittery U.S. stock market and ahead of important U.S. economic data that starts with this afternoon's FOMC minutes. A rally in the U.S. dollar index today has tempered the stronger early gains in gold and silver. December gold was last up $25.30 at $4,091.40. December silver prices were up 90 cents at $51.415.
This update adds broader context. It shows that precious metals are responding not just to technical levels, but also to macroeconomic factors like FOMC minutes, labor data, and movements in the U.S. dollar. Safe haven flows are still influencing the market, and Kitco is highlighting both the intraday pullback and the larger economic backdrop. He added, the precious metals ratio charts I have posted is your ticket out of the rat race. Fortunes will be made. This proxy chart is saying the tide is turning. The capital rotation is in the making. The pink reversal pattern has now broken out to the upside. Precious metals mining companies will become the new go-to stocks. This is a very bold and high-conviction statement. What Gradhe is referring to are the long-term ratio charts used in the metals community, things like gold to silver ratios or miners to metals ratios. When he talks about a pink reversal pattern breaking out, he's pointing to a technical signal he's been tracking over time. The bigger theme he highlights is capital rotation, meaning money moving from one sector to another. In his view, that rotation is shifting toward precious metals mining companies. Again, this reflects his personal interpretation of the charts he follows. Gold Silver HQ writes, another 2.3% of silver out of the vault in only one day. At this rate, empty vaults by end of the year. This comment focuses on physical inventory levels. When an account mentions a specific percentage, like 2.3% out in one day, they're usually referring to daily outflow data from major vaults or exchanges. Rapid outflows often spark conversation about demand, supply stress, or logistical pressure in the physical market. The empty by end of the year comment is an expression of concern about the speed of these withdrawals, and it shows how closely the metals community tracks physical inventory trends.
Eric Yoon on SGE silver withdrawals. Physical silver withdrawals at the Shanghai Gold Exchange SGE vault is relentless. Good luck, LBMA. This comment points to the heavy physical movement happening at the Shanghai Gold Exchange. When withdrawals stay high day after day, it often signals strong demand for actual metal rather than paper contracts. His closing line, "Good luck, LBMA," has a competitive tone, suggesting that the strong physical demand in China could put pressure on Western market structures. It's a sentiment we've seen more frequently, as analysts compare physical flows between East and West. Rashad Hagiev on market behavior. I prefer when precious metals under a pressure throughout the day. Odds are higher for the rally once COMEX opens. The pointless push higher throughout the day and puke at COMEX opening extremely annoying. Rashad is describing a familiar intraday pattern, metals grinding lower during global hours and then rallying once COMEX opens. He prefers that setup because, in his experience, it often leads to stronger upside moves. And his frustration with prices rising during the day only to drop at the U.S. Open is something many short-term traders recognize. It reflects the ongoing tension between spot trading worldwide and the futures-driven price action when COMEX comes online.
These are strong opinions and market observations from analysts and commentators who follow the precious metal space closely. But as always, interpretations vary and markets can move in many directions. This video is for informational and educational purposes only. Nothing in this video is financial advice, investment advice, or a recommendation to buy or sell any asset. Always conduct your own research and consult a licensed financial professional before making any financial decisions.